This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, South Africa's main stock benchmark traded broadly neutral today. That's after a 5-day losing streak. Advances by index giants Naspers and BHP Group suddenly helped to offset some weakness amongst precious metal miners and, of course, the banking sector. We saw the banking stock index dragged down 1% today by a fall in the rand. Gold and platinum companies were a drag on the mining index. They were down 0.6% today. General retailers also dropping about 1.1%. Now, in Nigeria, the oil share was looking up today, but it has lost about 5% so far this year to date, responding to some of those disappointing results, especially from consumer goods firms such as Guinness. And of course, banks are also reporting declines in interest income, which is dragging that index down too. Now, also coming up on today's show, a surprise decision for the Nigerian economy as the central bank cuts its key interest rate to the lowest level since 2016. And conflicting details about TikTok's deal with Oracle cast some doubt of its future in the US. And this entrepreneur is using organic farming to tackle Nigeria's food crisis. Well, we start off the bulletin tonight in Nigeria. The central bank has unexpectedly cut its key interest rate to its lowest level since 2016 as it looks to boost the contracting economy. Now, the country's inflation rate has been soaring above the target for more than 5 years now. 6 of the 10 MPC members who attended the meeting voted to lower the rate to 11.5%, and that's from the previous 12.5%. Of course, that marks the second rate cut this year so far. Well, let's find out more about the outcome of that MPC meeting. We're joined by Deji Badmus. He is in Lagos. Deji, great to have you with us as always. Now, of course, this month's meeting is coming against the backdrop of weaker growth in the country, or rather contracting growth, higher inflation, and of course, a volatile naira currency. Was today's decision to cut the benchmark lending rate a surprise to the market, Deji?
Indeed, it was a big surprise, Uche. Almost everyone had anticipated that, actually predicted that the NPC was going to hold the rate, basically leave them unchanged. But of course, the MPC surprised everyone, and it gave a very good reason for it. I mean, obviously, as the central bank governor said, what the MPC is looking at is at injecting funds now into the economy, because the MPC was basically looking at the growth of the economy, considering the fact that inflation is going up. There's a challenge with revenue. So what the MPC basically did is to inject more funds now into the economy with the expectation that that would stimulate growth, help industries to improve their production, and then help to reduce the rate of unemployment. So the MPC clearly looking at the bigger picture there and going beyond the issue of inflation rate now to deal with the much bigger issue, which is, of course, the economy, especially when you also consider the fact that Nigeria's economy is expected to go into recession in the next quarter. So basically, that's what the MPC did, to inject more funds now into the economy, provide access to credit, cheaper credit at that, and hoping that that would also catalyze growth in the economy. Uche?
Well, let's delve deeper into that, Deji. Now, last week we saw the central bank releasing an economic report. In that report, it painted quite a grim outlook. It actually warned that inflation may soar to more than 14% by the end of December. Of course, it was at around 12% in July. Now, it also talks to us about a number of broader economic challenges going forward. So what is its policy response, if any, to these challenges?
Well, of course, the CBN governor did talk about the issue of inflation, and of course, the MPC maintained that stance that inflation will definitely go up. At the moment, is around 13.22%. What the CBN is looking at doing at tackling the problem is to continue to inject funds now into the economy. Just as the central bank governor explained, the inflation we're seeing at the moment is basically structural as a result of the increase, for instance, in electricity tariff, the removal of petroleum subsidy and all of that. So what the CBN governor said is that as time goes on, that the CBN would be coming out with what he called very bold policies now to address some of the challenges that are being anticipated going forward. So we're likely going to see some injection of funds. And the good thing is that the central bank governor made it clear that the fiscal policy it would not actually turn things around, because, I mean, you look at it, the country is facing difficulty with its revenue now. The price of oil has gone down. It's going down. You have the problem with forex shortage and all of that. But going forward, the CBN governor making it very clear that the Apex Bank now will be coming out with bold policies in the nearest future now to address some of the challenges that has been anticipated, because there's no question at all, according to him, that the economy will definitely go into recession in the next quarter. But what he says the CBN is trying to do is to ensure that the impact of that recession is lessened and that the country does not remain in that recession now for a long time.
Well, with regards to the Naira, Deji, we've seen the CBN resuming dollar sales, especially to Bureau de Changes, in order to support the Naira going forward. Has its intervention so far been effective? What is its guidance going forward in terms of the FX rate? And are there any signs from them that we could see a devaluation of the Naira coming up? Or further devaluation?
I think from the way the central bank governor sounded today, I don't think we're likely going to see any kind of devaluation anytime soon. But in terms of the sale of forex now to the BDCs, I would say the impact has not been enormous, so to speak. Of course, we have seen some impact. We have seen the improvement in the exchange rate, but the truth is that there's still a very huge gap. Demand is actually outstripping supply. The central bank is not able to meet demand because it hasn't got enough forex to sell anyway. And you know what's happening to the price of oil. Nigeria is earning far less than it should earn from oil, so from the sale of oil now. So that is obviously a very huge challenge. And if the challenge persists, of course, there are those who are saying that there is a chance that we might see some devaluation in the future, but going by the body language of the CBN governor today, obviously it's difficult to tell we're going to see a devaluation. The CBN governor made it clear that the MPC has given the go-ahead that the Apex Bank should continue to intervene in the foreign exchange market. It's a level of the intervention now, of course, that will be the problem, because how much does the central bank actually have to continue to intervene? Its foreign reserve is actually very lean. It's trying to conserve it. So it's no doubt challenging days ahead as far as the forex regime goes. We just have to wait and see. But there's no clear-cut sign at this moment that we're going to see any devaluation anytime soon.
Well, overall, Deji, what sort of tone did the MPC strike about the ability of the government to put in place fiscal and, of course, monetary policy responses in order to mitigate the impacts of COVID-19 going forward? And did they give any timelines for an economic recovery in Nigeria?
Well, yes, the CBN governor made it clear that there's every likelihood that the country will record positive growth by the last quarter of this year, or possibly latest the first quarter of next year. So that's the timeline in terms of economic growth. I'm talking about positive growth now. Now, on the fiscal side, the CBN, of course, as you know, I mean, the Monetary Policy Committee now would have no control over that. And it made it very clear that the fiscal side is actually challenged because funding is not coming in. And so made it very clear that there's no doubt that, that the government would have to rely on financing now from development finance institutions that is going to work with the government, that's a fiscal side now, to ensure that this development finance institutions, whatever comes from there, will be judiciously used to address some of the problems the country is actually going through. And the CBN also made it very clear that it will continue its own intervention as well to ensure that, that the impact of COVID-19 that the country is currently experiencing is mitigated, and that the country does not spend such a long time now in that coming recession that is likely to happen, and that, it's short, and that the country records positive growth, according to the CBN governor now, by the end of the last quarter, or possibly the first quarter of next year. So obviously we're going to continue to see more intervention from the CBN, and of course, when those funding come, as you know, the government is seeking a loan now from the World Bank. That fund has actually not come. The government is hoping that the fund will come sooner than later. And of course, that will also make a huge difference now in the country's ability now to deal with its economic problems, especially the Forex challenge. Uche?
Well, always good to have your insight, Deji. That's Deji Badmus joining us there in Lagos. Well, let's stay in Nigeria. The coronavirus pandemic has increased the use of digital banking services in the country, where social distancing rules have led to long queues in banks. Now, the problems have been exacerbated by restrictions on the amount of dollars that can be withdrawn. But a new breed of digital banks are now competing with existing lenders to provide online financial services. CGTN's Terry Wangari with more.
Lele Balde is busy working as a media professional, juggling between hosting radio shows, being a culinary writer, and working as a business journalist. During the onset of lockdowns and social distancing, she had to look for other ways to avoid going into a physical bank to make transactions.
COVID-19 came and hit us, and nobody really expected it. So going to the bank now, a lot of people don't feel comfortable doing that. There's excessive lines. There's been cases of COVID-19 cases in actual bank branches. So people are changing the way that they want to bank. So right now, a digital bank, I think, is probably the only option going forward.
Balde is among many Nigerians who've sought digital banking services to enable continuity when it comes to conducting business. A new breed of digital banks without physical branches say they've had a boost due to the pandemic. Kuda Bank is a digital-only bank that launched in August 2019 with 500 customers. Since the lockdown was enforced in March, the bank says it's tripled its daily adoption of customers in the West African country's main cities, Lagos and Abuja.
We opened more accounts in April than we did in January, February, March put together. And we have seen sort of a sustained growth from that April. So, I mean, it's very positive, and we expect the growth to remain.
This has pushed many traditional Nigerian banks into digitalization in a bid to attract more deposits. After all, interest fees make up around 70% of banks' total income. Despite the competition, these digital banks need to collaborate with traditional banks for the use of cash machines.
Well, the places where we're going to collaborate, because they have an existing infrastructure. We don't have any. We don't have that. If, for example, let me use ATMs, for example. So my customers have to access cash once in a while. So my customers will use other banks' ATMs.
Some analysts say that digitalization was well on its way to a peak before the pandemic.
It was just a matter of time that the so-called new generation banks end up being the real banks. So that's also, what is likely to happen. But like I said, it's not going to be that simple because the traditional banks are also investing a lot in digital. So it's going to be an interesting space to watch in the next few years.
Digitalization in banking has changed banks' business model in the West African country. And with more people opting for digital banking services, traditional banks need to rethink their strategies in order to stay in business. Times are changing, and so should they. Terry Wangari, CGTN.
And now look at some other corporate headlines today. An independent expert says that the coronavirus will not derail the sale of consumer goods firm Tongaat Hewlett. The company's $322 million starch unit is going to be sold to Barlow World. It's part of the company's plan to reduce a debt pile estimated at $781.1 million. Now, the two companies had struck a deal in February over sale of the starch business. However, parties had differed over whether the pandemic had subsequently dealt a large enough blow to the starch business earnings. Meanwhile, Deutsche Bank plans to close down 1 in 5 branches in Germany in a bid to save costs and, of course, capitalize on the changing habits of customers during the coronavirus pandemic. The reduction of about 400 branches from an estimated 500 currently will occur primarily in urban locations. This comes as Deutsche Bank undergoes a broad overhaul of its global operations that began in 2019 after years of losses. And U.S. industrial giant General Electric is set to exit the coal market and focus on greener alternatives. The company adds that it will shut down or sell sites as it prioritizes its renewable energy and power generation businesses. And finally, Huawei says it will continue to cut staff members and investments in Australia due to the slowing demand in the country. Back in 2018, Canberra banned Huawei from its 5G network, citing national security risks. Now, Huawei says the ban has cost Australia 1,000 high-tech and high-wage jobs and a further $72 million of research and development investments. And that is a look at our corporate headlines. Well, we are heading to a quick break now, still coming up on the show. Ghana's Gold Royalty Fund eyes a $500 million listing in London. And the South Sudanese government is still struggling to pay its employees.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? And why?
Let's get some reaction on ground. Joining us in Johannesburg is Uche Okoronkwo. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
Africa is a continent of diversity, with varied climates and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent. to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
Tunis, Cairo,
Syria,
Juba, Ethiopia, Tanzania.
Africa Live. Find your voice.
Africa is the nexus of enterprise, and global business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back. Now, Chinese President Xi Jinping has called on all nations to achieve a green recovery of the world economy in the post-COVID era. Now, he was speaking at the general debate of the 75th session of the UN General Assembly via video on Tuesday. He also said humankind can no longer afford to ignore the repeated warnings of nature and go down the beaten path of extracting resources without investing in conservation, as well as pursuing development at the expense of protection and exploiting resources without restoration. President Xi noted that the Paris Agreement on climate change charts the course for the world to transition to green and low-carbon development, and he also urged all nations to honor that agreement. Well, let's now head back to the continent. Ghana is planning to list its gold royalty fund in London this October in a deal expected to be worth up to $500 million. The government-backed Agiapa Royalties has hired Bank of America and JP Morgan to pursue an initial public offering at the London Stock Exchange. Now, Africa's largest gold producer wants to take advantage of the good prices this year in order to raise money, and that's if the plan does not run into political opposition. Agiapa holds interest, including mining royalties in Ghana's gold assets. Royalties give a country the right to receive a percentage of production from mining operations or retain a stake in a mining firm. Well, let's get the latest on that listing from Nabil Ahmed Rufai. He joins us now in Accra, Ghana. Always good to have you, Nabil. Now, of course, as we mentioned, the political environment right now in Ghana is heightened given elections. Given that environment and, of course, Ghana's economic situation, what is the likelihood we'll see this IPO happening?
Well, Uche, that will depend on the consultation the government is having with civil society organizations and generally Ghanaians that have been opposing this particular deal. We know that the government is keen on bringing everyone on board to accept this particular royalties, and so far we know that it has met with some 15 civil society organizations that were not into agreement with this particular deal. So we would wait to see if the government is able to convince these CSOs and the citizens that have been opposing this deal as to why the country has to really embark on this particular project. Now, aside that, we know that the main opposition political party, the National Democratic Congress, has said is strongly against this particular deal, and when it comes to power, if this deal goes through, it will actually reverse it. So it's just a matter of time before October, and we'll get to know if the government has been able to convince civil society organizations and the general public as to why the need to really go ahead with this IPO, Uche.
Well, for the opposition parties who are against this deal, what exactly are the main gripes they have with this IPO?
Uche, the main issue many of these opposition parties have is the fact that they argue that this current agreement or the deal lacks transparency, and that's why they've been kicking against it. Now, aside this, they've also been saying that the company that will manage these royalties is an offshore one in a tax haven, and that will make it difficult to really monitor the activities of this particular firm. and that's why they are not really in total support of how transparent these royalties would go. Now, thirdly, there is this particular issue that they have with the current agreement as it is, the fact that the government has made it impossible for any future government to replace managers of these royalties, and it's something that they would want really reviewed, because they feel if another government comes into power, they should be able to have a stake of how the future of this IPO would go, and making it entrenched that the fact that those managing it will not be able to be replaced is quite problematic from what the argument that they have been able to bring forth, Uche.
Now, of course, Nabil, if this deal does go ahead, it will impact Ghana's coffers, its mining sector, its stock exchange, because the fund will be listed on the Ghana Stock Exchange as well. Paint us a picture just how much Ghana will benefit from this IPO.
So as we know, the government is trying to raise between $500 million to $750 million from this IPO. And what this means is that if it's able to go ahead, its plans of some infrastructural development will really succeed. We know over the years, governments have had to rely on the International Monetary Fund and also the capital markets and the international bond markets for funds for major developments in the country. And these sources of getting money really come with some conditionalities and restrictions, and as well as interest in high interest rates, and also the fact that when we get these funds, the country's debt distress really increases. So the current government is trying to really avoid all this stress that comes with resorting to the IMF, going to the capital market and also international bond markets for funds to embark on developmental projects. And it believes that by going ahead with this IPO deal, it will be able to get some cheaper source of income for these infrastructural developments, and is aiming at really investing in educational expenditure as well as health and infrastructural development if it's able to really go ahead with this deal. So largely is really going to benefit the country a lot if we are able to go ahead with this deal, but then we leave to see if the government will actually be successful in this, because there's been a lot of opposition on this, and it would have to come to a whole consensus. Every stakeholder would need to agree that this is the way the country would want to go in terms of its getting some developments for the country, Uche.
Well, many thanks for your insights, Nabil. Always good to have you on the show. That is Nabil Ahmed Rufai joining us there in Accra, Ghana. Well, let's head to Egypt now. The country has announced the formation of a commodities exchange, which will initially trade wheat, oils, sugar and rice, beginning in the first half of 2021. The North African state, which is also the world's largest wheat importer, established the exchange to provide protection for small farmers and producers, as well as make their stocks available to the wider market. Here's Yasser Hakim with the rest of the details.
The Egyptian government has established its first commodity exchange management company, which will aid in organizing the trading process of various foods and consumer goods, as well as the relationship between traders and producers. Cairo has been keen to regulate the scattered commodity market to help unlock value for its produce. Authorities view the specialized commodity exchange company as the best possible option to regulate the market.
We have been calling for such a company for years because it has an essential role in setting up a supply chain, unifying the price of products in all the country, and attracting more investments to the market.
One of the main conditions for the commodity market to operate is to have silos and warehouses built according to international specifications. The company also gives advice to farmers on the crops that will be suitable for the following year in terms of profitability or climatic conditions.
7 strategic warehouses will be located near highways and in different ports to facilitate the distribution of the products in the market. State-owned entities will own 60% of the company, whose capital is $6.3 million, while the private sector will own the rest of the shares. The company will be managed by the Egyptian Stock Exchange. Experts believe the new company that will trade electronically will ease the farmers' and traders' work.
The warehouses around the country will be linked together at the commodity exchange. Everyone will see the amounts of goods available, the price, and where they are stocked. All the information is clear and unified. This makes it easier for traders to strategize and make appropriate plans. For farmers, the selling price is clear and there is no room for negotiations or having multiple prices on the same product, as is the case today.
Most of those involved in its setup have welcomed the Commodity Exchange Management Company.
The commodity exchange regulates the supply chain. This system will reduce the number of middlemen and therefore reduces costs and price. It makes the farmers and traders become more competitive in the local market, and when exporting, we have strong competitors in the region like Turkey. So we have to develop ourselves and improve to keep up with others. It will also encourage investors to enter the market when it's regulated.
According to the Commodity Exchange Board, the company will initially trade in rice, sugar, and wheat, followed by steel in the first phase. Yasser Hakim for CGTN, Cairo.
And in South Sudan, the government is struggling to pay its employees as the country's dire economic situation worsens amid soaring inflation. Now, civil servants have gone without pay for months after a plunge in crude prices. That drop was due to the outbreak of COVID-19 and, of course, long years of civil war in the country. CGTN's Patrick Oyet tells us more.
Lucy Nathaniel is a government employee. She says her monthly salary used to be equivalent to $500, but inflation means her salary is now worth $5, and she hasn't been paid since March.
And when you look around the country or in the town, people look all sick. It's not really the sickness, but we are suffering, we are hungry. One per day cannot really manage our situation. When you have the tea, at times we sleep with the tea. When we have that one passion per day, it is very little, which is not enough even to make one sleep well.
Many civil servants are now abandoning government jobs. Some are riding motorcycle taxis, locally known as border, but that business is also not doing well since fuel prices have risen due to the devaluation of the local currency.
We are suffering a lot. Our government should do something to reduce the dollar rate against the local currency. Prices are increasing every hour because of the dollar rate. Now you get something at a certain price. After 2 hours, a different price. We cannot even have a proper meal.
The government says more than 19 revenue-generating institutions are yet to remit money to the National Revenue Authority, money the government relies on to pay civil servants' salaries. South Sudan's government says it is looking for loans, but it is being accused of lack of financial transparency by the World Bank. That makes it difficult to secure the funds to try and stabilize the economy. South Sudan's President Salva Kiir has instituted a committee to try and salvage the situation, but the committee says improving the economy is a lengthy process.
We have set up subcommittees. Some are buying gum arabic, simsim and other agricultural products from the northern part of the country so that we export these products and get some more hard currency. It will take some time, but things will improve.
For Lucy, it is now a matter of survival. She is hoping the government will help her find a way out. Patrick Oyet, CGTN, Juba, South Sudan.
You're watching Global Business Africa. Let's take a short break, but still to come. Conflicting details about TikTok's deal with Oracle cast some doubt on its future in the U.S. And we'll bring you highlights from China's annual International Garment and Textile Fair.
Taken me completely out of my depth, but
At the same time, it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
Over the last 14 hours of rain.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant.
Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
I try to not let it affect me, but there are days when it does. I'm a human being, and to see patients in a hospital bed and their family members are not there, there's no one there to hold their hand, that human touch, you know?
I just hope everyone can remember that the situation is not permanent and that everything will get better eventually.
And here's a quick recap of today's top headlines. The Ethiopian Electoral Board is expected to announce the schedule for the nation's general elections. That's after Parliament agreed to hold the postponed polls. This is after they were delayed twice. The first time was due to threats of violence and instability, and the second was due to the coronavirus pandemic. And at least 12 civilians have been killed in an attack by rebels in the east of the Democratic Republic of Congo. A Congolese soldier was also killed in the overnight attack that was carried out near the border with neighboring Uganda. Now, authorities have blamed it on the Allied Democratic Forces rebel group. And finally, Africa's black rhino population has been rising over the years, but the species still remains endangered as poaching and demand for its horns persist. Now, conservationists are warning that rhinos remain under threat, and there will be a decrease in the growth rate of the rhino population over the next 5 years. And that's a recap of our top headlines. Well, let's now turn to the future of TikTok in the U.S. Conflicting reports are making an agreement concerning the app's American operations seem precarious. The multi-billion-dollar deal was supposed to calm Washington's security concerns, but of course TikTok's owner, ByteDance, potential partner Oracle, and President Donald Trump are now disputing those details. Jim Spellman reports.
The deal to spin off TikTok into a new U.S.-based company appears to be very much in flux. The deal calls for Oracle, along with Walmart, to become the, quote, trusted tech partner of TikTok, with a new company known as TikTok Global to be formed and based in the United States. An initial proposal called for TikTok's parent company ByteDance to retain control of the new entity, with Oracle and Walmart taking minority stakes and Oracle hosting U.S. data. A revised deal emerged that saw Oracle and other U.S. interests controlling a majority stake of TikTok Global. U.S. President gave tentative approval to that version of the deal. But in a statement Monday, ByteDance seemed to indicate it will retain 80% control of TikTok Global, at least until the new company can be taken public. Trump is threatening to reject such a deal, telling Fox News, quote, "If we find that they, Oracle, don't have total control, then we're not going to approve the deal." Adding to the confusion, Oracle seems to contradict ByteDance, saying the Chinese tech giant, quote, "will have no ownership in TikTok Global." Any deal needs approval from Washington and Beijing. TikTok was slated to be removed from Apple and Google's app stores at the end of the day Sunday, but with talks seeming to make progress, that deadline for TikTok was extended a week, buying U.S. users at least a short reprieve. Meantime, WeChat has been given a reprieve of its own, a court in the U.S. halting, for now, the Trump administration's plan to ban downloads of the Chinese app in the United States. The Trump administration is fighting the court's order. Jim Spellman, CGTN, Bethesda, Maryland.
And shifting focus now, the idea of a wealth tax on all billionaires has returned to the limelight. How to tackle rising concerns on the widening income gap in the U.S. has become a key question in the 2020 presidential race. Well, CGTN's Owen Fairclough tells us more from Washington, D.C.
They're out for Amazon founder Jeff Bezos, the world's richest person.
We want a wealth tax on all billionaires.
Christian Smalls founded the Congress of Essential Workers after Amazon fired him for leading a strike over COVID-19 safety. He wants more for society's lowest earners.
Hazard pay, childcare, free healthcare, $30 an hour minimum wage.
Who've risked their lives to sustain the high rollers during the pandemic, and more from billionaires like Bezos, whose net worth is just shy of $200 billion.
They're getting tax cuts, they're getting incentives, they're getting tax breaks. Enough is enough.
Those kinds of breaks are blamed for widening an income inequality gap that's concentrated nearly half of the world's wealth in the hands of just 1% of the very richest. And Joe Biden, who's trying to replace Donald Trump as US president, has also had enough.
I will raise taxes for anybody making over $400,000.
But income inequality isn't new. It was accelerating when Biden was Barack Obama's vice president 10 years ago. The rage against the rich then mostly directed against Wall Street banks that created the 2008 financial crash, but were then rescued by taxpayers.
And income inequality isn't just about billionaires or bankers, it's everywhere. The fury that erupted this summer across the United States and beyond over the deaths of African Americans at the hands of police also exposed long-standing grievances about the systemic wealth disparity between white people and minorities.
And apart from putting income inequality on the global agenda, it did nothing for the wealth gap. Some billionaires like Microsoft founder Bill Gates, ranked just behind Bezos, have no problem with higher taxes, and Gates has donated much of his fortune to charity. But President Trump thinks cutting taxes in a booming economy before the pandemic helped everyone, even if incomes have risen only marginally.
I will cut taxes even further for hardworking moms and dads.
And while he wants to extend tax cuts to help middle-income earners through the pandemic, he isn't planning to make the richest pay more. Owen Fairclough, CGTN, Washington.
Now, northeastern China's Dalian has just concluded its annual International Garment and Textile Fair. CGTN's Son Tianyuan was there, shining the spotlight on medical equipment, which made its debut during the expo.
2 months after Dalian's last coronavirus outbreak, the coastal city is getting back on its feet. Introducing the 2020 China International Garment and Textile Fair.
This year's International Garment Expo is the first big event the city has held amid the COVID-19 outbreak. Although some global companies couldn't come because of the pandemic, their Chinese counterparts' expectation to expand business remains high.
Clothing companies from around the country attended this year's expo, including Dayang Group, the world's largest producer of made-to-measure garments. The pandemic has taken a toll on the company's revenue this year, as around 60% of Dayang's business relies on overseas orders.
Stores have opened gradually over the last couple of months, but the pandemic hasn't been rooted out, so customers come less frequently, and as a result, our rapid response supply chain has been interrupted.
The company has decided to shift its focus to the domestic market. The expo came at the right time for Dayang to showcase its products to customers at home.
We hope to make an impression to open up the domestic market and to boost in-channel circulation at home and abroad.
COVID-19 has spawned fresh opportunities and new trends at this year's Garment Expo. Medical equipment such as protective suits debuted for the first time in the expo's 31-year history.
Over the past few days, we've received customers who are interested in working with us. I believe this year's Garment Expo will bring in more orders and benefits for enterprises.
One's company used to make work suits, switching to hospital garments when the outbreak began. It has produced more than 1 million pieces this year. 1/3 of the stock was shipped to countries including Japan and the United States.
We all hope the industry recovers soon. As for the expo, the idea is to serve as a platform for people to present inspiration, products, services, and exchanges.
The expo also went online for the first time as a way to offset the impact of coronavirus. It's expected that the online and offline events will attract over 300,000 visits in total. Sun Tianyuan, CGTN, Dalian, Liaoning Province.
And on that note, let's take a look at commodity markets today. Oil prices climbing up. Brent crude was up over 1%. It certainly seems that analysts believe the renewed lockdown restrictions would have only a limited impact on fuel demand going forward. And that, of course, helped to reverse a steep drop in prices the previous day. Meanwhile, gold prices steadying in a tight range today. Worries over rising COVID-19 cases across Europe countered pressure from a stronger US dollar. Now, offering support to gold were concerns about fresh lockdowns, which are just starting in Europe. Let's take a short break now, still to come. We'll show you how this entrepreneur is using organic farming to tackle Nigeria's food crisis, as well as Ghana's plans to scale up production in fish farming.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
The greatest journeys, the greatest sights, the greatest adventures.
Here in Kanata, this weir allows the locals to walk on water.
We're far more than just TV news. We're your passport to the wonders of Africa.
To bring you stories of struggle, survival, and hope.
So let's explore. CGTN. See the difference.
You don't find the stories of North Africa by sitting on the sidelines. No one else will take you where we can in North Africa. And no one else will show you what it's all about. CGTN, see the difference.
Nigeria is battling a food crisis that has been triggered by the outbreak of the coronavirus, as well as the twin crises of floods and ethnic conflicts. But one woman is now trying to close the gap through her integrated organic farming program, which of course has helped thousands of youths to embrace agriculture as a business venture. Here is CGTN's Kelechi Emekalam with her story.
Routine rounds at the Sustainable Development Farms, an organic farm in Nigeria's capital Abuja, owned and run by Stella Iwagu. But she's no average farmer. The nurse, with over 2 decades experience in public health, found her passion in organic feeding and farming after a major accident confined her to a wheelchair. Worried that over 80% of ailments are food-related, Stella is looking to change the narrative. She has been educating women, youths, and physically challenged persons like herself on the benefits of organic farming practices.
I realized that people cannot have quality health care if they are so sick. And why are they sick all the time and the complications get worse is because they are not eating balanced diet. So their immune system is not strong. So that is what motivated me to start a farm to teach people how they can improve their health by themselves right from their backyard. I have a spinal cord injury, I have a traumatic brain injury with so many complications, like every organ in my body needed a doctor. I was on 21 different medicines 3 times a day when I came back. But I started taking herbs, started taking the gingers, the turmeric, the lemongrasses, the lemons, just natural food. Today I'm only on about 7 medicines. So I want to share my experience with others. I want to share my healing with other people.
The farm produces and packages a variety of organic foods and products, not just for culinary purposes, but health benefits too. And in the past 4 years, Stella has trained over 1,000 students from 10 universities across the nation, many of whom have set up their own businesses.
My goal is to teach everybody how to maximize their backyard. Our phrase is, what's growing in your backyard? Everybody can plant something. Every household can be self-sufficient. It can be pretty addictive and very satisfying. And then you can make really good money out of it. So we are looking at moving them from hobby to business. Teach them what is the business of farming.
Nigeria is exploring agriculture as a viable option to diversify its oil-dependent economy. This in spite of the challenges of poor infrastructure and working capital. But enthusiasts like Stella are taking it a notch higher, investing in regenerative agriculture. Kelechi Emekalam, CGTN Abuja, Nigeria.
Meanwhile, Ghana is looking to boost its fish farming sector, but with an increase in production, it is still crucial to find viable markets. Well, CGTN's Nabil Ahmed Rufai tells us more.
Ghana's marine fish stock is depleting at a rapid rate. Fishermen say the industry contributes about 400,000 out of the 1 million metric tons of fish protein the local market demands annually. So, fish farming is the industry's way of bridging the gap.
They are making a lot of impact by employing a lot of people. We also do this aquaculture for food and jobs, where the government is giving training, is giving resources to institutions such as schools and colleges, and then other institutions are the prisons, so that they give you the feed, the seed for you to produce. When you sell, you can get something.
Tilapia and catfish are the 2 main cultivated fish in Ghana and contribute 100,000 metric tons of fish demand. As fish farmers ramped up production in the beginning of this year, the coronavirus lockdown hit sales.
People were not buying their fish because people were indoors, and that one affected what? Their income. The fish will be in the pond, the fish will be in the cages, the fish will be in the tank, yet we'll be feeding them. But then, some of the fish were ready to be sold. However, because of the COVID, they weren't able to sell.
With restrictions lifted, Fish farmers here are looking to scale up production. The process starts by removing the eggs from the mouth of the tilapia. Once the eggs are retrieved, they are hatched in these incubators. The fry produced here are transferred into the concrete tanks where the hormonal feeding is done for between 21 to 30 days. About 1 million fingerlings of catfish and 3 million fingerlings of tilapia are produced here annually. It takes between 7 to 8 months for these fingerlings to mature for harvesting. But as fish farmers cultivate these fish, they have to deal with people's reluctance to eat fresh catfish.
Fresh one, and you'll be an fresh.
Many people don't like the fresh catfish. So when we bring it to the market, we may lose money because people won't buy it. They prefer the smoked one because it's easier to prepare when making soups.
Although dried catfish is popular in Ghana, the government is aiming to increase fresh catfish sales.
We are going to put up a program which we are going to call Fish Fair. And then the fish fair, we organize, maybe one Saturday, we organize somewhere, we are having fish fairs. You come and we present all the different products to you. You come and you can taste fresh fish cooked or put in paste or something. And you can see it, you can taste it, and we believe that you will like it. And that's the way we want to promote the taste for Ghanaians.
Still, fish farmers say more needs to be done to improve Ghana's aquaculture landscape. The cost of fish feed is high and makes up 70% of production costs. They want the government to also tackle that while addressing issues of a ready market for fresh catfish. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
And before we close tonight's show, let's take a quick look at Africa's currencies. South Africa's rand little change today as investors continue to digest those rising numbers of COVID-19 infections in some nations and, of course, the prospects of new lockdowns. But it did stabilize after its worst drop in 3 months yesterday when we saw it tumble more than 3%. Meanwhile, Kenya's shilling continues to trade at that new historic low of 108 shillings per dollar. It continues to be dragged down by demand for hard currencies from importers who, of course, are resuming business after the state started to ease those coronavirus containment measures back in July. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.